In this quick video, we are going to talk about something that I've seen many traders getting wrong when it comes to dealing with a stop loss. The majority of traders, they get this wrong and they end up losing a lot of money, and sometimes they are not able to become profitable. They just remain break-even traders because they are handling their stop loss strategy wrong. You need to have a good stop loss strategy. So before we get into that, by the way, if you are new on this channel, please consider subscribing so that you don't miss future videos. Go ahead and like the video. If I don't entertain you for a few minutes, I'm hoping that you learn one or two things. Then if you are looking to download stuff, forex robots, indicators, books and stuff like that, for example, the system that I'm using here, I've shared this on the blogs. The links are in the description box below, or you can watch the previous videos on this channel. After you finish watching this one and just go there, you'll find this system as well as these customized sell and buy patterns that I use that place your automatic stop loss and your automatic take profit. So everything that we do on this channel is for free. Go ahead and do and download whatever you need. Many people also ask me about the broker that I use. Their link is in the description box below. With just $5, you can start trading real life accounts, which is good if you want to test forex robots, if you want to test indicators, strategies without putting too much of your money on the line. I know some people want to do demo thing, but then I find that when you have real money on the line, whether it's $5 or $10 or $20, it's going to train you on something that is essential in trading, which is psychology. You need to train yourself on how you're going to react when you're making money, how you're going to react when you're losing real money, not the fake demo money. That never teaches you how to handle emotions in the market. So if you are like me and you want to train yourself properly, go ahead and sign up with the broker. The link is in the description box below. Just $5, you get to experience the true emotions of the market. Okay, so let's get back to our video. Before we get into our subject, I just wanted to do a quick breakdown of why I took this trade. It's a couple of sell trades you can see there, and you can see my TPs there and my stop losses there. So it's basically about 4 reasons. The first one, you can see we had a kind of head and shoulders pattern forming there. This is on the daily time frame, Euro USD. That will be the left shoulder and this will be the head. Obviously, what you understand is what you see in the markets is not as clean as you see it in what you see in textbooks is not as clean as you see it in the real trading market. So this is our kind of head and shoulder pattern that is formed on Euro USD daily chart. It might play out, it might not play out. So I'm not giving you this as a trading signal. So that's my first condition. Second condition, this thing has happened at our resistance zone, this red zone there. It's happening at our resistance zone. That's the second argument. Third argument, it's happening where at our upper trend line there. We have our first touch there, second touch there, probably our third touch there, or if you start counting here, our second touch there, whatever, however you count it, but we kind of have a few touches on our upper trend line for our channel there. So probably probably we might go this way, but it's also not a wild idea that the market might reverse and actually break out and continue going this way. That's why what we trade with a stop loss. That's why we try to do everything to minimize losing what our account, because we don't move the markets with our few $100. The market is moved by the guys that move the market, so they don't care about your patterns, about your system, about your robots or whatever. They don't care. They move the market the way they want. And so that's about that. So just 4 reasons why I took that trade. That's how you build arguments for your trade. You might have a spectacular reasoning or argument, set of arguments like I do here, and the market will still turn against you. Why? Because the market will do what the market wants to do. What we are doing with our strategies, with our indicators, with everything, our analysis and analyzing this, analyzing that, is just to try and put the odds in our favor. But the market still will do what the market wants to do. Whether you have got a perfect setup, whether you have got a perfect system, whether you have got good arguments, whether you have got good analysis, spectacular analysis, the market will still do what the market wants to do. So never forget about that. Okay, so let's go back to the subject of the video on the title, which is why you clicked on this video. So let me just go down to the 4 hourly there. So you can basically see we broke out of these areas, which for me is still some indication that we might be going down. But again, it's not a signal that I'm giving you. You will lose money. Don't do this. You will lose money. And when you lose money, don't come back and cry on my channel. Okay, so there's my entry. There is my stop loss. There is my take profit, which is what good Forex trading students do. You always trade with what? With your stop loss. You always trade with your take profit. You know when you are going to get out when you start winning. When you start winning, you know where to get out. When you start losing, you know when to get out. So you can see there what I stand to lose if it goes against me. I think that's for one trade. That's $50 that I stand to lose if it goes against me, and if it goes in my favor, I stand to make some $250, which will be a good day. So let's say price turns against me. Sorry, just to clear my throat. Let's say price turns against me here, despite my spectacular arguments or reasoning, and it still turns against me, and it wants to go this way. The market will do what the market wants to do. So what many people actually do, which is a huge mistake, is I will let most people will let what price come and take them out at stop loss, which is a bad approach, because what you want to do, this is me, this is how I trade. What you want to do when you are confident that price is indeed turning against you, you need to take some risk off the table. You need to take some risk off the table. You need to take that anxiety off the table. What I do is I have a mental midpoint between my entry and my stop loss. When price come to this area, I take off half of my entry. I take off half of my entry so that I am now losing less. Instead of ending up losing $50. You'll find that because I've taken off half, what's remaining is probably 25. And sometimes I then also check to see, is there any other place where I can also take off part of that trade. Eventually, instead of losing $50, I might reduce that to actually $30 or $25 or something like that. That's how you manage stop losses. Don't ever let price, you just watch price come and hit what? Your stop loss. Don't ever, now I'm triggering the wrong thing. Don't ever let price just come from your entry and it comes and hits your stop loss and you just watch it and you do nothing. What you want to do is when you feel that you have made a mistake, probably your analysis or your spectacular analysis is wrong after all, is at a certain point. At a certain point, you come and you what? You take part of that trade, whether it's 50%, 75%, or whatever you are taking off, and you take it off your trade. You'll find that you'll sleep better, because even if price never gets here and eventually reverses and goes down, you still have one bullet in the chamber, so that's that. But if indeed it chooses to continue going this way, what's going to be hit at your stop loss is not the initial $50 that I'm risking here. It's something like $30 or $25. However, you have what? Acted here, depending on the proportion of your trade that you took here. That's how you play with your stop loss. Never ever ever just watch price come and hit what? Your stop loss. Most of the time you will know. Most of the time you will know when price is coming to hit your stop loss. You will know. I don't know how, I don't know, but most of the time you will definitely know that price is coming to hit my stop loss. So why just watch it as it come to hit your stop loss when it comes to take money from you? What you want to do is take a good portion of that trade off when you are still maybe below midpoint or around midpoint, and see what happens with the remainder. If it eventually touches your stop loss, well, it's a very, very minimal risk, and depending on the amount of trades that you'd have placed here, sometimes some people, they place standard lots, they place double standards or 5 standards, whatever you used. You find that when price starts moving against you, you start sweating. That's when the anxiety and the frustration starts coming in. How about deal with that? And the moment you feel that this thing is going against you, or you did your analysis, everything was spectacular, you thought you had it, but it started turning against you, you come, or your mental midpoint, you take the majority of that entry off, and you just leave something in case what? In case it turns before going to your stop loss, it just turns and starts going away, and then you can come back and reload those trades that you took off. I hope that this makes sense. So never ever watch price just run to your stop loss and you just sit there folding your hands doing nothing. Many people think there is nothing they can do. There is something that you can do. You can easily take the majority of your trade or in all this area before price actually touches your stop loss. Eventually, probably if you leave your stop loss there, what's eventually going to touch your stop loss is very minimal. So instead of losing $50, you end up losing something like $30 or $25 or something like that. Okay, So I hope this tip has helped you to think about something that you probably use in your own trading. Again, subscribe, like this video, leave your thoughts in the comment section below. Until next time, guys, bye.